This week we have some inflation readings from the pound and the dollar, but we're kicking off this week with some New Zealand monetary policy. Let's talk about it here at Capital Markets. Traders, what's up guys? Welcome back to Capital Markets. It's your host here, Cleveland Bishop. Hope you guys are also having a fantastic start off to the week. Okay, so by this time we did get a new reading from a New Zealand monetary policy perspective, but we're still waiting on some inflation readings from the pound and the dollar on Wednesday. All right, so we're going to go over a very deep assessment of what's happening fundamentally in the markets this week, but also tie that back into the technicals. And again, if you guys enjoy the content, make sure you guys subscribe. And if you ever have any questions, comment down below. We'll be right there to answer away, right? So what's interesting is last week we had some Australian monetary policy where Australia did not raise rates, but this week maybe things are going to be different from New Zealand. Probably not. Usually New Zealand is going to track what happens in that Australian dollar, which means we're likely to see no rate rise coming in for the first quarter. Okay, so what have we seen so far? Well, here's a quick screenshot of the New Zealand dollar. You can see a massive sell side move. This slide happened after there may not be a resolution anytime soon in regards to the Chinese and the US dollar trade war. All right, you also saw that same type of slide on the Australian dollar, and this just goes to show that, hey, if you see two slides at the same time on those currency pairs, and that probably means it has to deal in some capacity with China. Okay, so if we get a break of the low here on the New Zealand dollar, then it's likely that we will see a very continuous move, sell side maybe 200 or 300 pips to the next monthly support target. So that's something that we're going to be keeping an eye out on, right? So outside of that, we do have some pound inflation readings coming out. Now, what's interesting about the pound inflation readings, which is similar to the dollar inflation readings, we haven't seen too much of an uptick. Okay, so for the past 5 readings or so, the pound has either met expectations or been lower than the expectation return, and that may just be because the monetary velocity again is lower at this time, up until you may start to see some things resolved in regards to Brexit. Right now, we're still shooting for that May 2nd Brexit date, and if that goes as planned, then it's very likely you're going to see a massive rise back to the upside when it comes to that pound. But from a monetary policy perspective, it's not too much of an aggressive data release in terms of how positive it is right now. That's going to allow for these market participants to want to trade that capital back to the upside. So we will see exactly what happens. The UK Prime Minister right now is still going through all the different negotiations with the European Parliament to get something passed. But if nothing gets passed for Brexit and if inflation stays low, then what you'll probably see is the UK central bankers not able to raise rates or do any type of aggressive monetary policy to start to get some of the unwinding off of their balance sheet like we're doing over in the US. And that does pull me over to the US market. Same thing actually. What we have seen is we've seen a lot of similarities when it comes to inflation. We've either met expectations or been lower than expectations. Right now, we're shooting for a negative 1% inflation target. Some individuals fear that that has to mostly do with trade war and a potential impact from the government shutdown, right? The government was shut down for quite some time. Trump did his State of the Union speech, but we're still not out of the woods yet in regards to the government shutting down. Again, if they can't get anything passed, then you may see Trump start to do what he mentioned, which was start to call some type of national relief or some national effort to get the border wall built. That'll mean $5.3 billion will be allocated towards the border wall, and who knows how market participants are going to take that type of move. Okay, it's going to be very, very interesting to see. What we also have out this week, outside of CPI numbers, is PPI numbers. And you guys got to remember, PPI stands for Producers Price Index. That information comes from the producers of the economy, the businesses of the economy, and how much they're paying for the products that they're creating. So consumers are getting those products, but producers have a bunch of resources and manufacturers that they have to buy products from, and those products are going to increase and decrease based on demand, right? So that's something that we're also going to take a look at. Usually CPI and PPI, they're usually around the same, but PPI does come out first, and it's somewhat of a former indicator. It's going to give us an idea of how that CPI is going to report out. And lastly, retail sales. Retail sales accounts for 66% of the United States GDP. That's absolutely massive. Okay, so anytime you see a retail sales data release come out that's negative, it kind of gives you an idea as to how the data release is going to be for GDP, okay, the gross domestic product of the overall economy. All right, so what we're expecting again is a lower end number for retail sales, which is going to result in probably markets just really being more or less calm. People expect the dollar to not be growing so fast at the moment, so it may not disturb markets so much. So all of this being said, guys, there's a lot going on right now, whether you want to start looking at the pound as a buy opportunity if Brexit gets passed, or maybe you want to start looking at the pound from an inflationary standpoint. Either way, policy initiatives and economic concerns are going to be driving that specific market. When it comes to the dollar, again, you have policy when it comes to trade war, but then you also are, again, we want to keep an eye on things economically. So there hasn't been this much stuff happening in markets for quite some time. You guys want to be able to take advantage of these moves. You want to head over to capital-markets.com to get your account started today. It's one of the best brokers in the entire industry. We route from some of the best liquidity providers, which means you guys won't see any slippage or latency. And we also have some of the tightest spreads, which means you guys are going to be paying less and less per trade. That's going to be amazing for our day traders. Guys, head over to capital-markets.com. I'll see you guys tomorrow.